Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is January 17th, 2019. We're going to start down here at the bottom here with gold. That's going to be the primary market that I want to talk about because it has just such a strong short, intermediate, long-term trend here. We've got the technicals pointing to the upside, and we've got the seasonal tendencies pointing to the upside. So we're just kind of stalled right now, and it's kind of surprising that we're giving ourselves, I think, a pretty good opportunity, either that or we're about to do a complete about face. So let's take a look at gold here, and we'll start off here with the dailies. I did a little bit on Twitter today just talking about the fact that gold really was at a point right through here. These are daily bars, right up against resistance 1296, and so that's where we're stuck right now. We've attempted to break through here on a couple of occasions. Now what's interesting is that this yellow line is the 50-day moving average. This kind of whitish grayish line is the 200. It's inevitable, unless there's a complete about face, that these are going to intersect, and that will probably drive some interest in the market, because it typically does when you get one of those crosses. I don't use it as an opportunity to buy. I just like to know, are we close to a cross, because a lot of people do look at it, and that could be the impetus that would push the market to the upside if we can break through that particular level. If we look at weekly bars, we're kind of in limbo, where we've had a nice surge, these being weekly bars, where the market has really kind of rallied here for a fair amount of time, and it's stalled out a little bit. But that strength to the market and the fact that the elastic level has gotten into overbought territory, usually when you have that kind of a condition, we'd see extreme volatility. And so I think it's just taking a breather for the most part. So I got a chart that I want to show you that I haven't really shown before, where we have I'll just simply show this to you. Go to charts and then volatility analysis, and then you can come to the individual market. And what we look for is just weekly analyses. That was a weekly chart that we were just looking at, and this is a value added weighted index. Essentially, it's a price chart, but with a bit of a twist. But I just want to point out that it's not in a high volatility phase or a low volatility phase. The market is relatively quiet coming into the surge that we've actually had. Let me just switch back here. It's this surge right through here on weekly bars that you would expect that the market would have a little more increased volatility. It does not. If we take a look at another chart that we have, the energy level, this one looks more for consolidations and expansions. Two things I want to point out here. Here's gold in the tail end here, where it's on the plus side, but barely on the plus side. All of these gray bars, I'm going to scroll down here a little bit, 95 of them are in neutral phase. Two things here. Gold's in a neutral phase along with a lot of other markets, and there's not like there's been a lot of energy spent getting to this phase. That's the point. So the fact that we're at that resistance level bodes well that there's still more strength to the market that we could really pop above if it's going to pop. The other thing is that with all the 40 odd markets that we look at, 95% of them are in neutral phase, and only 2 of them, cattle and Canadian dollar, are at an extreme. Now there's obviously some that are close to the border, but you can see a large number of them really have relatively small bars, which means that there's a lot of potential to the market. They haven't expanded themselves and extended themselves too much like these two bigger markets. So if there is a surge, they've got energy to really make some big moves here. So we'll come back here to gold here. So this may not be over, but we're just at a resting spot. So the surge that we've had here, both on a volatility basis and then the energy basis, we're really not overextended. That's the point. So with this kind of reluctance to break through this bigger level, just simply watch that level. Again, it's 1296. That's the major number you want to look at. Now, for some added benefit here, I've got a gold chart here for the seasonals. This is a 10-year chart, and you can see that gold, for the most part, can have extended periods where there's tradable opportunities, but it can kind of go flat for a period of time, and then slow kind of nice, but slow kind of trends to the market. There's trends along the way all over the place, but this, from basically January 1, or if you'd like, if we go back to last year, the tail end of the year, it's typically up and away. And so there's usually a continuation at least until late February, call it almost early March. So that being the case, the fact that we're up against resistance, we have not a lot of volatility, not a lot of energy that has been spent on weekly bars getting to our particular point. On daily bars, we've got that resistance level. There's a good chance that we could get a bit of a breakout here, or the whole thing could fall apart, but we're at one of those critical points. So watch gold. That's the bottom line. The systems right now didn't pull those charts up in prep, but right now we are long gold just with one position and has an open position loss right now. Just a small, maybe almost $600 or so. So there is opportunity here that we could still see a bit of a pop when it comes to the in this particular case, to the trend. And if we pull up the projection for gold, I'll just take a second to come up here. What you'll see is that it has a nice potential. Let me just come down here to gold, and you can see from a day or so ago that from that low to the high that would be, as this is only 21 days out, this would go into February 1st. If we went to the extent, but we're looking at low to high, almost 6% move. So there's opportunity. It's not to say that we will get a 6%-ish move, but it tells you that there's a lot of power to that particular trend if history is going to somehow repeat itself. And so that resistance is looming and could actually turn out quite nicely. So let's watch gold. Let's watch the systems and see how they are able to react to a particular thrust above that level I've been giving to you, and see as whether or not there's an opportunity to make some money in gold. So thanks for watching, and we will take a look at some more markets soon enough.